Let me ask you guys a quick question. Have you ever been driving down the road and you see a property that maybe it needs a little bit of work done to it? You're like, man, this would be a perfect property to flip if I only had the money. Hi, how's it going? My name is Eric Loya, and I work with Father's Plan Realty, a Southern California brokerage. I am the co-owner, co-broker, and mortgage lender for this family-run business, and we serve the Southern California market. I've actually been a real estate investor for the past 10 years. And really today, what I wanted to share with you is the power of hard money lenders. And more so than anything, understanding that there's actually lenders out there who are willing to finance your next flip or your next investment project. However, they operate completely different than a traditional lender in qualifying for a traditional loan. So I wanted to go through some of the details, what it looks like, what kind of costs you can expect to pay, and where to find some of these guys as well. So let's dig right into it. I'm going to share my screen with you guys here. Don't forget my notes. Hard money loans. What are they? How do they work? How do I qualify? What costs can I expect? And what are some common misconceptions? So I want to dive right into it. So hard money loans are pools of private capital loaned to real estate investors who are seeking to flip or buy and hold distressed real estate. That's the key factor, distressed real estate, rundown property that needs to be fixed up. These lenders will fund deals that traditional mortgages will not, usually because of significant deferred maintenance. So if you've tried this already, guys, if you try to buy a flip property that's been severely damaged with a conventional loan, more than likely your lender probably won't approve it. You know, if there's any issues with the foundation or plumbing or roofing or anything significant to the property, a lot of times that lender is going to want those repairs completed before they make the loan on the home. However, hard money lenders are looking more so at the finished product that you intend to create and provide you a loan based on that finished product's value. So let's dig into a little bit how they work. Typically, hard money lenders will lend you anywhere from 70 to 80% of project costs. So project costs usually being a percentage of the purchase price plus the repairs. That's usually the cost taken on per project. Repair funds, so usually what they'll do is they want you to put, X 10 or 20% towards the purchase price. And then what they'll do is they'll fund you in a separate escrow account, 30, 40, $50,000 for repairs, in which they monitor how that works. I'll describe in a second. But typically, repair funds are dispersed as draws based on a percentage completion of the repair project. So usually after 25%, okay, I'll give you 25% of the whole project cost. After 50%, there's your next 25%, and so on and so forth. So as stuff is completed, you get paid. Just like any other person in the workforce, right? You go and you do something, you work for 2 weeks, 2 weeks later, you get paid for the work that you did. Same thing applies with construction and repairs. Now with hard money loans, these are shorter term loans, anywhere from 6 to 24 months. They're typically about 1 year on average. Because they're short term, rather than doing a full principal and interest payment like a typical loan, it's interest only payments. We can, if you guys have any questions, I have a lender contact I would love to provide to you if you do have a deal. Just go ahead and send me a direct message and we can talk about what that looks like in securing a term sheet for you. The good thing about these guys, the hard money lenders, is their ability to quickly fund deals. If you're a recurring borrower, usually they can fund a deal in as little as 5 days. If you're new, you're gonna have to supply a little more documentation, so it may take as close to 2 weeks to close. Nonetheless, it's a lot faster than a conventional mortgage, and it's just as competitive as if you were using your own private capital. So how do you qualify? So like I mentioned, these lenders are a little different. They're not necessarily looking at your ability to make a monthly payment, as they are as how good of a deal is it that you're actually buying. So what they want is they want you to submit a property for funding approval. So they want the address so they can run the research and get an idea of what the general values are of properties in the area. Usually they'll require a business entity. These are business loans. So you'll have to either have an LLC, a corporation, a general partnership. You could, if you don't have anything, you can go to Rocket Lawyer and set something up pretty simple. I am not an attorney, nor am I going to be one or act like one, but I'm giving you guys some insight as to where you can go. Submit proof of funds. So they want to see, really what they're looking for is they want to see, do you have enough capital to complete the deal, and you have reserves for interest payments, as well as if anything goes wrong with the property. So they're more concerned what you actually have in the bank than they are what's coming in per month, or even your credit score for that matter. They do want a credit application, but sometimes, again, they're not as strict as a conventional loan. So you could have, there's a greater acceptability in credit scores there. Estimated repair costs, you want to let them know, hey, what are you guys planning to do to the property and how much is it going to cost? Usually you can snag that from a contractor. Submit comparables sales. So you want to show recently sold properties. If you guys haven't seen my CMA course, comparative market analysis video, check on YouTube. I go through in detail what a CMA is and how to do one. But basically you want to share recently sold properties to prove your resale value to a hard money lender, right? So these are things that they're looking at to determine how much of a loan to provide you. Now, what kind of cost can you expect? So they will do somewhat of an appraisal or a broker price opinion, desktop analysis. There's some, usually it's a form of evaluating the property, and they do charge you up front. So within a day or two, you can expect to pay anywhere from $250 to $500. Every lender's different. And then you can continue on with the project, get the term sheet, so on and so forth. Underwriting and origination fees, just like your closing costs in a property, these are more of the upfront costs to secure the private money, typically 2 to 5%, and that varies based on your experience. And then interest rates are anywhere from 8 to 12% interest-only payments. Again, it's a lot higher of a cost because it's a short-term loan, and they want you to pay it back quickly. And they know that you're profiting from it as well. So those are things that you can expect from a hard money lender. Common misconception. So one thing that people say is, man, hard money is just way too expensive. I'm not going to pull anything out of a deal. Well, let me share with you the power of leverage and how borrowing money from a hard money lender can actually make you more money. So if we look at example one, $100,000 invested into a deal, just using even numbers for this sake. Let's say that deal turns $30,000 net profit, right? So you got a 30% return. Let's say it took you a year. Usually it shouldn't, but could. So you got a 30% for easy numbers' sake. It's a pretty good return, right? I mean, usually, if we're post-COVID right now in a pandemic world, and a lot of people are seeing that 30% in the opposite direction in their stock market. So this is where real estate can come in handy. Side note, but example two, we're taking that same 100,000, but we're breaking it up. We're using hard money loans, right? We're getting 80% loans on these homes. So we're putting 20,000 across 5 different deals, right? Now, let's be real. You do have to pay costs, and you're not going to make as much of a profit. However, you can still profit. So for easy numbers' sake, let's say, okay, I'm going to share 10 grand with my hard money lender. So I'm going to come out with $20,000 net profit. Then again, you're doing 5 deals. So in reality, when those 5 deals are complete, same money invested, you're walking out with $100,000 on $100,000 invested, 100% return on your money. That's the power of leverage. And I wanted to share this with you guys because I don't want you guys to limit your thinking as far as, oh, this is too expensive to happen, right? So if you guys have a deal and you want to consider funding for it, reach out to me, send me a direct message, email me, text me, whatever you got to do. I'll take a look at it. It won't take me long to evaluate it and see what I think. I've been investing for 10 years and, I'm more than happy to take a look and see if it's something that makes sense. So that's it, guys. That's how hard money loans work. Maybe went through it a little too quick, but you have the video for your reference. You have the slides for your cheat sheet. I just wanted to give you guys that breakdown and let you know there are partners out there who are willing to help you flip homes. Again, we're all about building financial freedom here at Father's Plan. And so this is one of the avenues that I actually personally used when I first started investing in real estate. So I hope you guys find that valuable. Any questions about the content, just reply here in the link below. More than happy to answer them for you. Again, hope you guys have a wonderful day. Take care.